Hello, friends. It is Thursday. It's March 7th. It's almost 11:30 on the west coast of the United States. In this video, we're going to be looking at the silver charts. So let me share my screen here and we will get started. Here we go. And there it is. All right. So yeah, silver, we already said that. Let's take just a quick look at gold. What I'd like to point out in this chart is that gold has pushed through the previous all-time high impulsively. If we look at that particular price bar, previous price bar, that was yesterday, we get an impulsive push through the previous all-time high, close above that level, and now all of today's action is above the level of that previous all-time high. Now, if you're a breakout trader, you might consider that a breakout, and you'd be long at this point based on a breakout trade. Now, some people trading breakouts will wait for the pullback. So assumption and statistics bear it out. We get a little bit of pop over the breakout level and then a pullback to test the breakout level. And so some breakout traders wait for that pullback. So, but anyway, very positive action in gold. In this chart, we're looking at COMEX, and the front month, the contract that is currently trading is April. And so if you want to take physical delivery of gold off of the COMEX, you're looking at the April contract. I would point out that based on MACD, gold is very overbought. And we can see from these prior highs in MACD that we're not only at that level, those levels, but above those levels at this point. So very, very overbought in gold in this time frame on the COMEX chart. Look at that green volume. Lots of buyers, lots of buying of this April contract. So anyway, this is a bullish chart. Energy obviously elevated, moving averages in bullish alignment, 50 above the 200, 20 above the 50. So anyway, just a really nice looking chart. Notice the 2000, that's down here. So all of this action, we've got 1, 2, and we could actually call that a double test, 3. So we've got 3 tests of the 2000 area as support, and now price is running away to the upside. Now, never say never, but it is possible that we will never see gold testing 2000 again. Just saying. Reach your own conclusions. Now we're in gold spot, so this is not futures contracts. This price gold. Again, overbought based on MACD, pushing up into those prior highs. Energy very elevated, moving averages in bullish alignment. So similar to the COMEX chart, another very bullish chart here. Big move. I mean, that's a strong move. But I would also point out it's a strong move, but not a ridiculous move. Not a, hey, we're going parabolic, which of course parabolic moves always fail and don't behave well after failure. This is not a parabolic. This is just a very strong move to the upside in my estimation. Now, the last time we looked at this chart, which I think was about a week ago, I drew this yellow highlight suggesting that, that was when, that would be 2 weeks from now, that out in this time frame, gold would be testing this median line and the previous all-time high for resistance. Well, yesterday, we pushed through the median line impulsively again. And now today we've pushed above that level. And so far, the bulk of today's activity has been above the level of that previous all-time high. So again, potential breakout. another breakout in gold. And same thing applies, you know, do you trade as a breakout trader? Do you trade the initial breakout? Do you wait for the pullback? The statistics bear out the idea of waiting for the pullback, but the risk of doing so is that price runs away from you, excuse me. You're sitting here waiting for the pullback and it never occurs. And instead of buying in at, you know, 2150, call it, you know, a retest of the breakout, you're chasing price higher, and chasing price never a good idea. Let's see, anything else? So that's gold. I just wanted to take a look at the gold charts to show that this breakout is, you know, the breakout that we talked about back here. I think this is, last time we looked at these charts, we were back here, and gold was just pushing through this resistance zone. So another breakout in gold. Now, let's focus on silver. Again, these COMEX charts, futures markets, in silver, we're looking at the May contract. That's the front contract in silver currently. Big push higher in price. Currently, we're pushing up into this resistance level from this prior peak, pulling back today from that level. We've also got the first median line extension of this shift pitchfork acting as resistance. So two levels of resistance. Price has pushed up into that level and currently has pulled back. MACD in bull mode on a buy signal with plenty of room. Let me scooch this chart a little bit. Got lots of room in MACD to continue to the upside before reaching this overbought level from the prior high in MACD. Energy very elevated. Silver has not been as strong as gold. And so to some extent, in my mind, silver is playing catch up with gold. And it's got a little ways to go to play catch up with gold, and of course nowhere near. We'll look at the longer term charts, but anyway, previous highs way up here at 26, and of course that's not all-time high. We'll see in the long-term charts, you know, this was back in 2020. We were up at $30, and so we got a ways to go before we're testing the previous all-time highs in silver. Now this is silver still in the daily time frame. Spot silver, lots of room to run in MACD. MACD in bull mode on a buy signal, energy very elevated. We've pushed through resistance at the upper median line of this modified shift pitchfork, run into resistance from this prior peak. Just above that level, we've got the first median line extension of this mod shift fork. So let's continue. This is silver in weekly time frame. Big bullish bar, impulsive bar in the weekly time frame. Notice how the lower median line of the shift pitchfork has provided support on numerous occasions, going back all the way to October of 23. And so we can definitely say that this fork, this shift pitchfork, excuse me, I'm spitting, is valid. MACD, lots of room to run before it becomes overbought. Let me, hello, where's the top of that? Anyway, what I want to show here is that new buy signal in MACD. That's this green. If we look at the histogram, the fact that we've got a green bar in the histogram tells us that we've gotten a crossover, which is a new buy signal. So MACD in bull mode, brand new buy signal this week. And so very, very nice action in silver. Again, it's got a ways to go before catching up with gold. energy rising sharply up towards the elevated or the extreme elevated level. So again, nice action in the silver weekly chart. Silver monthly, I just like every time I look at this chart, it's like, hello, would you do something? Just a bunch of sideways. Some people might try to draw a head and shoulders pattern out of that. Who cares? But we'll see. I suspect that silver will continue to move to the upside. Again, got lots of room to run to catch up with the current action in gold. We can see that we've got this resistance zone overhead here. That's in the, we'll call it 25 to 26.50 range. So silver's got some work to do as it moves higher, unless, we always have to keep in mind that silver may just, do a pop. It may do an impulsive move and just shoot through that whole resistance zone. But we'll just have to see what happens. Silver in the quarterly time frame. So each of these price bars represents 3 months in time. Like we looked at in gold in the last video, we could see that potential cup and handle pattern. And depending on, people, different analysts draw the cup and handle differently. In gold, I was showing, basically the cup and handle in gold currently looks something like that. Obviously here in silver, that, the handle is pointing down, or perhaps we're waiting for, let me find an arc tool here. We're waiting for the same thing that we see in gold, which is, the traditional, that would be the handle of the cup. 6 one, half dozen of another. What I see in this chart is, again, a breakout. We can see highs, test the low of the range, push up to the high, and now working on pushing through that level and potentially breaking higher. If we apply the target methodology for cup and handle, it gives us a target up here at $40. Just as a reminder, we draw a line from the top of the cup to the bottom of the price action. We duplicate that line and move it to the top of the cup, and that gives us our upside price target, which, just a little bit over 40. We would assume that 40 as a significant round number, we will see price react at that level and most likely do some sideways consolidation, perhaps a little bit of a pullback. Time will tell. Let me close this chart because I don't want to save those changes that I made. Silver in the half year. So now each of these price bars represents 6 months in time, which makes it easy to see the prior all-time highs. Of course, this is back in 1981, where we got, early 1980, when gold shot up to, in this chart, it's $48. So we got a high there of $48. Back in 2011, the high was $49.80, 83, almost $50. So anyway, got a long ways to run, almost a double, essentially a double. Silver has to double its current price to reach the all-time highs from years past. So, and nothing really new to add in this chart. MACD in bull mode on buy signal, energy very elevated. So again, silver's just looking real good, playing catch up with gold. Now let's look at the silver stocks. And so SILJ is one of the junior silver miner ETFs. Of course, if you dig into these junior silver miner ETFs, you find that, well, those aren't juniors. They've got, they're holding stocks of silver miners that have multi-billion-dollar market caps. Well, in my mind, when I think of the junior stocks, whether we're talking gold or silver, they are well under $1 billion and actually under, say, $500 million, 500 million. So in my opinion, this is inappropriately named ETF. It's not a junior miner ETF, but well, who cares what I think? So, but anyway, back to the ETF, weekly time frame, big impulsive bar. So very nice action in this ETF. Let me turn off volume so it's not a distractor. We can see that price has pulled back down to this support level. It was support here, it was support here, and now support again. And then we get this big impulsive, even a little bit of a gap there, impulsive price bar coming off of support. So very nice action in silver. Notice in MACD that we've got lots of room to run to the upside before this vehicle becomes overbought. So albeit, with that said, MACD is in bear mode and still on a sell signal. Energy rising sharply, about mid-range currently. So, nice action in the silver stocks as represented by this ETF. And again, impulsive price action this week. Pushing up into, that's the 40-week moving average, comparable to the 200-day moving average on the daily chart. So obvious resistance zone in any vehicle. Doesn't matter what you're talking about, that 40-week or 200-day moving average is a likely resistance zone or support if we're testing it from above. This is the silver miners ETF, and they don't, this is not a junior ETF, junior miners ETF. These are the big boys. So again, nice action, daily time frame, MACD in bear mode on a buy signal, rising sharply, energy very elevated, nice action in volume. Rising action, of course, we don't have today. We've still got, what do we got? 4.5, 5. Yeah, 5 hours. Got 5 hours left in the trading session today. So lots of time to get more volume in this bar today. But rising action. Let me turn off volume again, so not a distractor. We can see double bottom, support level, and this strong rise off of that support level. If we wanted to, we could talk about runaway gaps. This isn't a super example of runaway gaps, but it's not a bad example either. Runaway gaps occur when the price action is energy is so elevated that price just, it runs away. That's why they call them runaway gaps. And so, and they tend to occur in series. And so you don't get a single runaway gap, you get 3, you get 5, and so anyway, in this vehicle, we've got what we could refer to as at least 2 runaway gaps there, which, again, it's an indication of elevated energy. Note in the moving averages that they're in bearish alignment. In contrast to gold, in this case, we have the 20 below the 50 and the 50 below the 200. So that's the exact opposite of what we see in the daily time frame for gold, physical gold. Gold is in bullish alignment. This is bearish alignment. But again, very nice price action, pushing up into the 50-day moving average, which, that's an obvious resistance level. So the silver stocks are showing us some pretty good action. I'm encouraged by that action in the silver stocks. Just to look at, we're going to look at this is the 10-year, the yield on the 10-year note in the daily time frame, and then we'll look at the dollar in the daily time frame. We can see that we're getting a pretty strong pullback in interest rates. And of course, this is, in my estimation, this pullback is occurring, hot air from the feds, basically, telling us that rates are going lower. And I simply don't believe that that's the case. I would point out in this Andrews pitchfork, the pink Andrews pitchfork here, that price is currently testing that as support level. And we'll see whether that support holds or if interest rates continue to move lower. We also have price testing this, what is that? 1, 2, 3. That's the third median line extension of this red Andrews pitchfork, which again, it looks like it might be providing support for the current action. MACD in bull mode, but on a sell signal, energy very low. Powell, Fed Chairman Powell, gave a speech one day this week. I don't remember which day, Monday, Tuesday, doesn't matter. And he was continuing to walk back the idea that the Fed is going to pivot or that there will be multiple interest rate cuts in 2024. He was highlighting that inflation, they haven't reached their inflation target yet. According to him, they are still targeting 2% inflation, which is just silly. It's laughable. Inflation currently is at least 12%, based on John Williams' shadow stats. He's using the same methodology that the BLS used in 1980. Based on that methodology, inflation is currently 12%. If you think about your experience at the grocery store, paying your rent, shopping for new housing, cost of insurance, gasoline, any number of factors where you can look at what's going on in your personal life and say, yeah, ain't no way that inflation is anywhere near 2%. 12% seems more realistic. Depending on what you look at, it's actually higher than that, but yeah, it's enough about inflation. US dollar obviously experiencing weakness yesterday and today. This is an impulsive move to the downside currently. Notice how, daily time frame, price or the dollar pushed or dropped through the 50-day moving average, which, that's obvious support level. It acted as support yesterday, obviously failed as support today. And now we're getting this impulsive price bar to the downside after price has dropped through the 50. So that's bearish action in the dollar. And the point I would make, the reason that I'm looking at TNX and DX is that weakness in these two vehicles is contributing to strength in the precious metals. And so we have to keep that in mind when we look at the precious metals. To some extent, the metals are reacting to weakness in the dollar and interest rates, lower interest rates. So continuing with the dollar, MACD mostly in bull mode, dipping its toe down into bear mode, currently on sell signal, energy very low. So that's all I've got in this video, folks. Let's see. Yeah, so I'm going to close it up. I look forward to talking to you soon.